Let's talk stocks. Can they keep going up for the rest of the year? We'll talk about the banks, the RBA and the economy, and we'll wonder why gold's price is falling. What is that telling us about our future? I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money. All right, Paul, you've been away on holidays doing absolutely diddly squat for the business, but you must have been watching the stock market. What do you think is going to happen to stocks for the next 3 months?
I think at a high level, the stock market's done pretty well over the last 3 or 4 weeks, showing a bit of strength as well. Even yesterday, you could say, was quite a good performance given the lead. But my guess is the US is just showing a little bit of pre-nervous interest rate increase. There's obviously more suggestions today that an interest rate increase is likely there. And I think we're going to just get a little bit of nervousness in the US market. So I'm probably on this camp of just feel there's a bit more downside in the market at the moment.
Yeah. I think we finish up at the end of the year, but I think there will be ups and downs along the way. So if we're at 5,450 or whatever we are, I think we could easily be 5,600, maybe 5,700 if things work out our way. But certainly I think there are going to be ups and downs. I
think what's interesting as well, Peter, is there are a couple of sectors that are doing better, right? Number one is materials. Yeah. You've got to say there's a bit of underlying strength now in the materials sector. It's up 35% year to date, largely in the back of BHP and Rio, right? And every time they dip there, we're starting to see firmness come back into that market. So I think they've turned the corner. Also, some of the financials, higher interest rates should do better for the banks. I think that's going to follow through. So I think we're going to see maybe the major companies lead this market in the dips.
I'm glad you said it, because this is your chance to praise me. How many months ago...
My chance. Pete, I'm always praising you.
How many months ago did I say that maybe the top 20 could be a good contrarian play, and it looks like it's actually working out?
Well, it looks like the expensive defensives are going to remain expensive and are going to come under some pressure, but I think the smarter money is starting to move into some of the major stocks, but not. But they'll do that in an environment where the market's being sold off a little bit.
Yeah, great stuff. Okay, let's talk about the Reserve Bank first, and we'll finish on the bank inquiry. What was the key message you got out of the RBA?
I think one take that's been written up this morning is that the new governor doesn't seem to be in any hurry to lower interest rates. In fact, I have to check the exact wording, but one of the takes from yesterday is that low inflation is okay, it's going to stay low, and just because it's going to stay low doesn't mean interest rates have got to fall. So I think the take from yesterday's RBA comment was that 1.5% is about as low as it goes.
Yeah. I guess we should point out the last inflation number was 1%. We get another inflation read at the end of this month. I guess if it's really low, like 0.4, 0.5, he would cut. He'd be worried about. But if it comes in around 1 or even a little bit higher, I think you can forget rate cuts.
Yeah, I mean, I think the chances of another rate cut this side of Christmas are lower today than they were yesterday.
Yep, and I also
on the back of what he said.
I also think if I'm the Reserve Bank Governor, Phil Lowe, and I love Phil Lowe because Phil Lowe was a manly second rower who played for the Poms. He was a Pommy, but this is going to be a very...
This is another Phil Lowe, right?
It's another different Phil Lowe, but. I think what he's going to do is he's going to say, well, why should I move on Cup Day, which is a famous day for cutting rates, when I should wait to see what happens to the US election? Could Donald Trump derail and spook financial markets? Could that then delay the US interest rate rise, which is a possibility? Therefore, I would rather keep 1.5% up my sleeve in case I need it, either in 2017 or straight after the US election.
I see no reason why he needs to cut rates at all, so I'm with you, Peter. I think we may have seen 1.5%, maybe getting to be the bottom.
And do you think he thinks the Aussie economy is looking pretty good?
Look, I think the Aussie... I think there's some sense, and they're still quite positive about the economy. And I think they have been all along. And in fact, that's what the data says as well, despite all the naysayers. I mean, things are moving along, just grinding along, but they are moving. And I think they're a bit more positive than others.
We have to ignore the bell for a second.
Yep.
On the banking inquiry, how did you score it? Politicians versus banks?
Banks 1, politicians 0. After today, I think it'll be banks 2, politicians 0. Okay. There is no case for a Royal Commission. There never was. And look, yesterday the politicians, they had a bit of a chance. They asked some good questions, but they didn't have the data to follow up. And I think the Rev just caned it yesterday. It was a consummate performance. He had some vulnerabilities around executive pay, about why no one has fallen on their sword over what's happened with CommInsure. But he passed that up, and look, they couldn't really make a case. I mean, and it's not up for the banks to talk about competition. That's the thing for government. I mean, I think the banking market, despite what people say, is competitive. There are 150 different organisations that can take deposits. There are 50 different organisations that lend money. There are 50 different organisations that have credit cards. But what the point Narev made was in places like the GFC, right? People don't care about competition, they want security.
Correct.
If you have strength, you want a strong financial system, it means you can't have hundreds and hundreds of players, right? And people forget that.
My take is, and I wrote a story this morning about this, is that the banks like Kim Kardashian, everybody hates them, but they still follow them.
Yeah, look, there's no one likes Sherlock was never popular, never going to be popular lending money.
Right.
You need them, they're a necessary evil, but don't expect the population
And let
to
me
like
say
them.
something nice about you, Paul. Paul actually created ComSec, which actually brought down the cost of buying stocks. So this guy saved a lot of investors'
I've saved,
money.
yeah, and I'll get my, I'll send you a bill, Peter, for that very, very generous
Now,
endorsement.
quickly, gold prices fallen. What's that
Through a
telling you?
technical level, but I think that's all part of the story of higher US interest rates. The Fed will put up interest rates, a stronger US dollar, and I think the gold market's finally caught up.
Yeah.
Look, they said it was technical last night, and we'll probably get a bit of a rebound, but you know, the same sort of thing we're seeing, higher US dollar, higher interest rates, commodity prices are moving up. I think gold is the casualty.
Yeah, I like gold price falling because it tells me that the view on the global economy is just getting a little bit better, I think. If you're scared, you buy gold. If you're not so scared, the gold price can fall. So that could be a good sign. I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money.